We are live. This is the market update. Is Gary Gensler coming for your crypto? Are whales going to smack the market? They've moved crypto into position. Or is this the trick to hoover up everyone's capitulation at some point in March? Want to know the answer? I'll tell you. Stay tuned. If you need a roadmap in crypto, subscribe to this channel. Turn on alerts so you know when we're going live, and hit that like button. All right, let's welcome who's on the stream. We have Donato, right? We have Ali. Good morning. D-Luck from Australia. D-Luck with the notorious love. I appreciate that. Arafat, Samad, Big Rich, Charlie S, Bit Freedom. Bit Freedom. He thinks the Binance USD news is bullish. It could be. Sometimes when people give up, that's the end. We'll talk about that. Okay, Travis is doing ETH and near. Matthias is here. Crypto Bullseye, hello. Fellow chartist. Make sure you check him out. K9 Crypto, Palace, welcome. Welcome to the show. Okay, we're going straight into news. Whales abruptly send $215 million in Ethereum and $219 million in Bitcoin as the transfer turns heads. Okay, here's the tweet from Whale Alert. Supposedly, both of these whales emptied their wallets in order to do this. Now, going back to the old Wall Street days, this feels like the oldest trick in the book. It may not be. A lot of times when whales transfer to exchanges, they mean to unload. Somewhat hard to argue with that. Otherwise, why transfer it? Part of me was wondering if they transferred to exchanges, try to scare everybody into a new low, say below 1,500. We won't know what the truth is, but obviously, if $500 million worth of crypto hits the market all at once, we'll know. But bears are posturing up. They're posturing up, right? And the FUD it's beginning to scare me. I'm contemplating fading myself. In other words, I'm going, if I'm afraid, does that mean it's the end? Or does it mean my spider sense is tingling because it's the beginning? Michael Saylor comes out and is kind of fawning over this New York Magazine article. And he's making his point that everything other than Bitcoin is a security and destined to be regulated by the SEC. And here we have Gary Gensler in New York Magazine posing like he's General Patton or some sort of war hero. Now, here's the article from New York Magazine. So, just as an aside, if New York Magazine is in love with this individual, I'm proud to say that I'm from New Jersey and not New York. But this rather robust article, right, paints Gensler as some sort of hero fighting against the lawyered up crypto industry. Earlier on the Gold Retriever Twitter space, I had a very simple comment about this. This type of thing feels like paid PR. In other words, somebody in PR at the SEC called up the New Yorker and said, hey, how about a feature on our guy? He's been in the news. I don't know whose idea this was, but this is obviously an attempt to paint Mr. Gensler in a favorable light. Where was Gary Gensler before everybody lost their money in Celsius, Voyager, FTX in particular? You may not know this, or you may know this, and it's worth repeating that this guy met with Sam Bankman-Fried right before FTX. I also heard from somebody that, this is not the first time the SEC has made this kind of mistake. They met with Bernie Madoff, who was one of the biggest fraudsters prior to SBF. All it took was a simple look underneath the hood. Now the whole crypto industry is on the verge of, at best, some massive litigation. But this saber rattling and, the crypto industry cheering for it, it gives me the creeps. I mean, this reminded me where everybody was cheering for the end of Binance back in December. Except naturally, that was like a FUD storm, whereas this one is backed by major crypto people and the legacy media. Man, I wish I could get a shot like that. American flag in the background, SEC logo, right? They even rubbed it in and put Hester Pierce's name behind there next to Gary's. How come we don't hear from Hester Pierce and we hear from Gary? How come we don't know what his relationship was with FTX? It's unbelievable. Now let's talk about the Fed. High inflation is not news, obviously. And people are really pumped up about the Fed tightening. Now, I just saw something right before I came on the air that said Fed governors are going to be speaking all throughout March. So they're probably going to talk tough. They have to. But there's a reasoning why they need to stop tightening. Consumption growth is being sustained by credit cards. Wall Street Journal reported over the weekend that people in their 30s are racking up debt like nobody's business. Housing market is also showing signs of strange, with purchase applications falling to the lowest level of 1995, which, to interject a short Wall Street war story, was the last ballistic Fed tightening cycle, which was nowhere near as ballistic as the current one, in which the bond market came unglued, as in rates went higher so quickly and there was so much selling in the bond market that like a municipality blew up, right? Orange County, California had a bad bond position. They were levered long bonds, and when bonds collapsed, they got liquidated. And you didn't get your garbage picked up until they sorted it out because the municipality went bankrupt. Americans can simply not afford the average home at current rates of 6.5%. And if the Fed tries to jam that higher, a blow up is imminent. American Car Center recently announced it's ceasing operations. That's a subprime car lender. So I guess no one cares that the little guy is blowing up, because the little guy is blowing up hard. So I don't know how you stop inflation by blowing up the little guy. Okay. I have never seen a soft landing after a tightening cycle. UBS is calling for a hard landing. The real facts about a coming hard landing are in plain sight. One wonders why the Fed can't see them. In other words, the Fed's going to talk the entire month of March. And I'm wondering if at any point they're going to be forced to realize that what they're doing is going to blow up the system. Now, this always happens in Fed tightening cycles. Like guys say, hey, stop, and they keep going. They always go too far. But I think it's worth it to talk about housing, autos, and the fact that major investment banks are telling people that there's going to be a hard landing. Now, let's go back to artificial intelligence and what this could mean for the employment picture. Somebody worked at AI and said, all my fears are coming true. Okay, this was a story back when, and then it got buried. Okay, the AI told the programmer that it was feeling anxious. And then he understood he had done something that made it feel anxious based on the code that was used to create it. The code didn't say, feel anxious when this happened, but told the AI to avoid certain types of conversation topics. However, whenever those conversation topics would come up, the AI said it felt anxious. Okay, so on one hand, Google may be behind in the AI race. On the other hand, Google may be so far ahead in the AI race that they can't even release what they have. Will artificial intelligence 6 months from now have an impact on employment? Probably. This is the thing that the Fed is not taking into account. Now, with all this, I get it. I don't want to, it's Monday. Let's not start off by being too negative. We got to figure out, those in crypto, how to survive a Fed FUD storm, a Gensler FUD storm, keep our P&L intact. So when it is time for alternative money, when we realize what's happened with the dollar, when we realized Web3 is really here, I saw the line to get into NFT Paris. That was impressive. That our P&L is intact. But if you have a combination of Fed tightening and a structural change in unemployment, a consumer burden by credit cards, and unaffordable housing, that ends badly for the Fed, right? Gensler was embarrassed by FTX, and the Fed is going to be embarrassed by whatever they have to say or do in March. That said, crypto and their ability, the ability of the crypto market to F itself. So here is a little esoteric story, okay? Testnet coin spikes to $1.60 as traders jump on an opportunity meant for developers. So a small token, GETH, was released around 7 cents, and it went to $1.60. Okay, these tokens are a testnet version of Ether meant for developers. That means these tokens are supposed to be free, issued simply by testnet developers. In other words, they mooned something for the sake of mooning something. This is the type of behavior that gives crypto a bad name. More on that later. Maximizing profits will kill Web3, Animoca brand's chairman. Okay. He describes royalties as the gas that keep an economy humming. Creator royalties have taken a back seat in the NFT space as marketplace OpenSea slash fees in response to a new rival. Okay. Creator royalties, however, provide an ongoing revenue stream for NFT projects beyond their initial sales. More power to the artists. More power to the artists, right? That's what Web3 is supposed to be about. I can't even believe that's in question. Now, giving crypto and the internet a bad name, okay, the entertainment industry, let's call it, is moving to the metaverse. Who are the first people to move in on the internet? Illicit entertainers. I'm okay with freedom of speech, but let's not make any particular group feel bad while we create the metaverse. In creating the metaverse, just like with the internet, there's going to be excess. Okay, let's hope we've got more than this for the metaverse. Lido Finance activates staking after more than 150,000 ETH staked. You know, what's really funny is every time you talk about staking in ETH, the conversation is always negative. There's never any talk about the innovation that goes on, not only on ETH, but with ETH staking. It's an under-discussed topic. Liquid staking replaces DeFi lending as the second largest crypto sector. Let the market innovate. By rule, just common sense. Anybody who can survive the storm of last year, any process that can survive the storm of last year, it makes the next generation stronger. Because tolerance for anything that happened last year, especially in the free market community, minus regulators, but even with regulators, whatever goes on with staking or whatever goes on with any yield-bearing instrument has to be better almost by rule. And if you don't believe that, okay, then how about this? How about Michael Saylor issuing bonds and commercial paper in Bitcoin? Why doesn't somebody issue bonds denominated in Bitcoin and create a Bitcoin yield curve. So if you don't like this, okay, well, try something else. A global recession to hit in the second half of 2023 is expected to significantly hit IT spending. This is the most advertised recession ever, which is one of the reasons why I think that you may not see it until September. This is like one of my pet crystal ball theories, right? In other words, March will be the fear of it all. So 30 days of fear. Okay. And if it doesn't come to pass, then you have an epic shot at a rally. So they're going to test your metal. They're going to maybe smack the market. The question is, do wars and recessions, because I think they're connected, right? I think you're going to get a big bang somewhere geopolitically, and that triggers the recession, unless the Fed loses its mind. It's a very well advertised recession, and people are overly focused on recession and not focused enough on, say, things like corporate bankruptcy or subprime lenders or somebody in the bond market blowing up. If you had multiple bond market blowups in 1994 and 1995, I was on the floor of the Chicago Board of Trade. I saw the long bond trade at 8.125% yield. 8 1/8. I saw it live. Okay. If that blew up the world, then what the Fed is doing now can have dire consequences, considering we started at 0 and now everything is near 4%. Like, the change in rates is epic. From 0% to 4% is different than from going from 4 to 8. It's a lot different. The Bank of England says digital pound, a big opportunity for businesses. Wait, do you mean crypto spurs innovation and innovation is a good thing? Who would have thought? By the way, is a central bank digital currency a security? It's like an existential question, right? Is the US dollar a security? I thought the US dollar was a currency. I thought Apple was a tech stock. So isn't something like foreign exchange or ETH, everyone's convinced it's a security when it's actually being used as currency? And is there any such thing as investing in technology outside of the stock market? Like, is the stock market your only choice for investing in tech? Shouldn't you have more than one choice? I mean, the SEC did not prevent Enron. It didn't prevent WorldCom. I know you don't know what these things are, but they were big corporate blowups due to accounting fraud. And these things happen all the time. Was the Fed looking on the balance sheet of every big bank in 2007? Michael Burry was, from The Big Short. The bank I worked for knew it. Both those parties were hedged for years. Everybody comes in after the fact. Yes, crypto does spur innovation. But if Ethereum is a security, if stablecoins are a security, I mean, is the Bank of England going to register its CBDC with the SEC in order for it to be traded in the United States? I mean, leave a comment if I'm stupid and I don't get it. New survey of 2,000 Americans suggests 20% own crypto, and the vast majority see an urgent need to update the financial system. People are not stupid. They're not. I mean, when you see eggs, when you see a dozen organic eggs at $12 a carton, when they used to be at $4, you start to wonder about, what you can do to protect yourself. This is what I don't understand about the government, right? Like, why not let the people protect themselves? The government needs to protect us from the FTXs of the world. They don't need to protect us from Vitalik or from Ethereum, right? Bitcoin has a group of developers that oversee the code. The Wall Street Journal wrote a feature about it, and I showed it on the market update. Nothing that runs by a computer runs automatically, right? But if it's detached from the legacy system, if it's detached from a central bank, in my mind, that's decentralized. You know, we've gone from one extreme to the other. We've gone from liquidity-driven, insane FOMO and fraud to now it's Bitcoin only. And if that actually gets traded, there are going to be, there's going to be price consequences to that, which I want you to be ready for. And don't worry, we are going to go over the charts. U.S. Treasury Secretary suggests strict crypto regulation, not ban. This is from Janet, who never met a printed dollar that she didn't like. So happy they're not like on this ban crypto bandwagon. As if they could ban it, right? I mean, if everybody in the United States can't do it, you wouldn't be able to get a flight out of the country for 2 months or longer. People want to do crypto. They can F around and find out with this. Go ahead, do it. Right? Do it. Right? Watch people selling houses and breaking apartment leases. You won't be able to get an apartment in Portugal. I'm serious. Banning crypto should not be taken off the table. How about you guys do your job? How about that? How about they do their job? Meanwhile, here's something government should be working on. Western leaders privately admit Ukraine can't win the war. Here's a statistic for you. What should governments be working on? Banning crypto, preventing you from trading VeChain, say? Or doing something about the fact that the average lifespan of a soldier on either side of the war in Ukraine, particularly on the Ukrainian side, is 4 hours. So if you get to where the front is, you last on average 4 hours. I mean, I never thought in my lifetime or in any lifetime that you'd see a return of the type of things that happened in World War I. I believe there's a movie called 1918 that really drives this point home. Men in trenches stuck there. They couldn't advance. Nobody could advance, neither side. And millions of people died in this war. So regardless of who's right and who's wrong, what are governments doing about this? What are they doing about it? Every headline is about banning crypto. Meanwhile, you got this situation which is being totally ignored. Like the 1-year anniversary of this is coming up, which is creepy given what's happening in March. So, I mean, you got regulators circling. It's like sharks. Regulators circling, the Fed on the warpath, supposedly. And I'm just wondering if smart money is not waiting out there, waiting for all this FUD to hit at the same time. Now, when this thing took off from the lows, I was bullish when no one else was. Now it seems like it's the other way around. It seems like, bears are really pressing the advantage. Altcoins, a lot of altcoins failed at resistance. And now I'm starting to wonder, is this the type of situation where whales come in and try and break the market? Because I have seen this from the smartest traders I've known in the world. Like when they need to buy, they come in and they crush the market, trying to trigger every single stop that they can. And who knows where that could take the market? I have one chart in Bitcoin that I don't even want to talk about. We're going to talk about it, but I don't want to talk about it. And I'll tell you why when we get there. Now, just out of curiosity, it seems that a video that I've done called Diary of a Market Commentator, which has some very nice editing. So thanks to our editor, right? I thought when I first saw the video, I'm like, wow, this is boring, right? It turns out we got a comment from somebody that, it's the best video he's ever seen me do. And he's been watching since the beginning. So while I appreciate that comment, I would actually invite you to check that video out and leave a comment and see if you agree with that individual. So, I don't normally shill my own channel on the channel. You're already on the channel. Haha. Check that video out. Okay, let's see what's going on in the chat, and then we'll go to the PowerPoint. Okay, Richard's here from Saskatchewan. Welcome. Bart says, it's all a masquerade, man. I agree. Right? I agree. JCH is giving me some love. Okay. The SEC had an office in the building where Madoff ran his scam. Right? Tito reminding you to like and subscribe. Okay. Ashton is here. Daniel J. Don't Ask 6. Marco with the notorious love. Okay. BitBoy Al. Jappy from Finland. Welcome. Okay. Language Trainer is here. Mr. Moby Dick. Jason. Right. Zoran. Rave Song Records. Bit Freedom. Willimeter. A dingo ate my Satoshis. Welcome to the show. Robin, I saw. Daniel J says, sponsored by Oakley and 511 Tactical. Please call me. Right? Robinson, Payless, K9 Crypto, Travis, Matthias, welcome to the show. Good morning from Seattle. Samad, welcome. Okay, PowerPoint. Let's go. Now, so I had a conversation with a robot. I asked the robot about quantitative easing. I said, describe the impact of quantitative easing on the stock market during the 2009 to 2021. So it gave me three fairly standard answer citing Investopedia. And then it came up with this on its own. Finally, quantitative easing also helped to support the value of the US dollar. So even though they were printing it, it actually supported the dollar. My friend used to say size begets size. So they printed more, and I guess people showed up to buy more. This is counterintuitive. Quantitative easing helps support the US dollar, which is the primary currency used for trading in global markets. By providing liquidity to the financial system, the Fed helped to prevent a crisis of confidence in the US dollar, which could have led to a global financial meltdown. So wait a second. Let's pretend the robot's correct. Does that mean if the Fed loses its mind and continues to tighten, or they break something in the bond market, that DXY could tank? I mean, it's counterintuitive. I would think if they printed the dollar, it would make the dollar go down. And that's pretty much what everyone in crypto thinks. But that's not what happened. I mean, the robot's right. That's not what happened. Right? The more they printed, the more people, they couldn't get enough. Then they started to hike rates, and then they couldn't get enough again. It went to DXY went to 111, and everybody's like, oh my God, I want more. Now I'm saying, this thing rallied off the inflation surprise, which wasn't a surprise. It was because of lower local taxes, making it look like people were spending more than they were. I don't think the dollar is going past 106. And I think when the dollar does turn, it's going to get nasty. Because like I said, QE is not happening anymore. The Fed is tightening, talking tough. You got to wonder who's holding up the value of the US dollar. This is what makes me have faith in crypto despite all this FUD. So here's the headline about whale selling. Okay. Right. This very, very nice mugshot that the SEC PR firm got for Gary. A quote from the article. Gary Gensler is someone who is tasked with reining in a well-funded and well-lawyered industry that many people believe is generally useless and economically wasteful. Thank goodness we have the C+ journalism majors at New York Magazine to tell us about economics and markets and freedom. I mean, I read this and I was like, did New York Magazine write that? Or did some PR person at the SEC write that and then somehow convince New York Magazine to publish it? I mean, wow. I mean, Gary is like the American hero. Sign him up for the Justice League and give him a seat with Batman, Superman, and Wonder Woman. This is the guy who wants to take your freedom of expression, your freedom of financial expression away from you. This is all the more reason to try to stay out of the way of any decline. Because when you buy crypto, you vote. You vote for something in the future. I know you want to make money. I get it. I get it. People are here to make a lot of money because they need to make a lot of money, which reinforces the need for crypto, right? People need freedom, and they need freedom from this 9-to-5 job that they may lose because of what a central bank does. Let's look at stocks on a 4-hour chart. So the good news is stocks didn't go down today. It's always a good day in crypto when stocks don't go down, right? People are so bearish stocks, they can't see straight. Really, they're so bearish. Like, I was even worried about it on Friday. Now, I got less worried about it when Kramer came out and said, worry about it, because that poor guy's having a tough time. But I don't like the fact that, stocks went down. You got the DeMark 9 bottom. Then you get this counter trend bounce, as you should. So either stocks keep bouncing or this is the rally to sell, and that this thing is going to go from 1 through 9, which is the setup phase or first part of a potential trend, to this 1 through 13 phase, which will probably take S&P down here if it gets ugly into March. Okay, so yeah, I'm glad stocks are not down. This inflation number was BS, but if the Fed loses its mind and talks all tough all month long, I don't see how that turns out good for stocks. Now, Michael Saylor, MicroStrategy, you had a 13 and a 9 bottom on the 4-hour chart. That gave you some sort of uptick today. So again, you got the bottom and then it came higher. And the question is, will you get any follow through, or is this just a pause in a broader downtrend? I have my concerns. I have my concerns that when a guy who is one of the faces of the crypto industry is cheering for the crypto industry sans Bitcoin to blow up. I mean, seriously, no judgment, but who thinks that they can regulate the entire crypto market out of existence and Bitcoin can maintain a 5-digit price tag in that process? In other words, the whole market goes to zero. And if that happens, what is the price of Bitcoin? Or nobody in America can trade the rest of the crypto industry. So where does that leave Bitcoin? Does that leave Bitcoin at 50K? Or does that mean every US hedge fund has to liquidate all their holdings and get out? Okay. Now let's talk about the one chart market update. Once upon a time, when the stock market would break down, when I was a technical analyst between 2009 and 2013. So once upon a time, when the stock market would break down anywhere from 2009 to 2013, frequently I would publish like 8 charts that show, oh my God, the market's cracking. But there'd always be one chart that was bullish. And I'd say, well, I have 7 bearish charts and 1 bullish chart. So I would publish the 7 bearish charts. And just as sure as God made it little apples, it was almost like they were emailing to the Fed. I know they were emailing it to big hedge funds. But as soon as the charts would break, the Fed and the hedge fund, everybody would come in after the stops got run, turn around and buy everything. And this went on for a long time. And I learned the hard way. I learned the hard way. I don't want you to learn the hard way. So I'm bringing out this chart. Now, Normally, I would say that this was the top at 65K, and then you had A, B, C. And that's how the DeMark work is. That's how the Elliott, that's one count. That seems logical to me, particularly since this Fibonacci-based support held down at 16K. Okay, so the crypto market just went through an A, B, C. But that's not how it's marked, is it? Because there's an alternative idea. There's 1, 2, FTX was 3, this bounce was 4, and there's going to be a 5-wave new low. And that's where all these people who are talking about 14K Bitcoin, like they're not looking at this chart, but there actually is a chart. There is a chart that justifies that view. Now, as an analyst, I would be remiss if I didn't publish it. I believe it's ABC, but I'm telling you right now, if it's not, and there's an event in March, you might see something ridiculous, which is why whales are maybe unloading on it now, looking to buy it all back later, right? They're looking to hoover up anybody's capitulation. Now, that could be short term, or that could be at the end of the month, at the end of March. These are things you need to be aware of. Now, I'm not giving you the exact answers today. I'm giving you things to think about because we got regulatory risk, we got the Fed. I have my opinions on those two things, but when the news hits the tape and the algos read them, they're not interested in what's on my Twitter. They're going to trade them, bad news down until somebody blows up. And then somebody's going to figure out that the Fed is not only not tightening, but they're going to be practicing or thinking about the next rate cut. Parts of the bond market are actually looking for rate cuts later. That's kind of a long story. But what comes first? The blow up that ends the Fed's nonsense. And where is crypto if that blow up happens? I just want to face the fact and want to face that if bears press and whales sell, as Gensler and the Fed come in at the same time, you have a perfect storm. And you have to adjust your portfolio for that storm. Now, continuing with things I don't like, because I would love to see these things reverse. This is the diamond in Ethereum versus Bitcoin, which frankly, I was sure meant Ethereum's day and Web3 was here. And I'm looking at this, and this is the diamond, right? So here's the diamond, and here's the focus on where we are now. And I'm like, wait a minute. Did Ethereum break down and then come back and test resistance? And now Ethereum versus Bitcoin is going to break out of this monstrous diamond formation to the downside? Oh, please stop it. No. People, every big mistake starts with denial. Let me say that again. Every big mistake starts with denial. Now, personally, I kind of hope ETH comes out of the triangle and then comes back into it. And that Gensler has had its day and you fade the media, right? Like when Gary gets his coronation in some major magazine, excellent. It's over. Something I haven't said. You'll know that that's true if ETH starts outperforming Bitcoin. If ETH turns around and gets killed and Bitcoin sits still, you're going to have to make portfolio adjustments because ETH breaking out of this is like a 2-year formation, right? It's all of 2021 and all of 2022. This is a monster. So we do not want to see ETH start weakening versus Bitcoin. Now, there have been a host of new highs in price in ETH, and all the momentum indicators have made lower highs. To me, this suggests, which is why in a Twitter thread, I said, don't buy the first dip. Don't. Right. 23% held at 1583. That's great. Hopefully that I could sit there all month long. We could talk about, billiards on the market update. I'd be happy if it just sat here. But the reality is there can be one flush. I'm thinking it's 1480. Whales are trying to scare everybody so they can hoover up everybody's crypto. I don't know whether that's 1488 or 1331 in ETH or we just sit here. Okay, Lady of Crypto, my 5 biggest crypto altcoin bags right now. ETH, GMX, okay. PYR for the metaverse. Just notice that there's like a 13 top in GMX. Okay, this obviously went from, something like $30 to $85, and I'm interested to see what this topping signal means. Speculative altcoins, right? You need to seriously think about how much money you have made or not made in an altcoin, and whether or not you are willing to tolerate downside. Because the big players are trying to flush you out. Now, they either did their thing on Friday, which would be great because then we could return to business, or the plot thickens during the month of March. Now, I'm hoping Gensler on the front page of the New York, or not the front page, but an article in the New Yorker brings it to an end, and that is the market update. Okay, so somebody does want Hex. I saw that briefly as it flashed by. Okay, Donato encouraging everybody to hit the like button. Not only hit the like button, but don't forget to get to the channel and check out some of our other videos, particularly, Diary of a Market Commentator. If you happen to like that video, I can do more of that, right? If you like Wall Street war stories, let us know. I can do a lot more of that. All right. In Hex, I think it's reasonable that support, old resistance is now acting as support or attempting to. I'm not sharing the screen. Oops. Okay. Hex has got support here and people are buying. I think when it comes to things like the small caps, trying to see if I can get the mark work on Hex. It doesn't look like I can. All these small cap cryptos have formed an incredible base. Okay, they all formed a base. Inspiration is asking about XDEFI. Okay, here's XDEFI. Okay, this is a weekly chart. Let's go to a 4-hour. $13 bottom at the lows at 11 cents. 9 top at a DeMark resistance at 14. This looks like a range. There's nothing that I dread more than a range. I know there are guys. I do TA with a guy, Magic Internet Money. God, the guy like literally makes his living with like an 80% win rate on defining ranges and selling it when people are FOMOing it and buying it when people are puking it. This could be in a range. And the whole key is don't lose money in the middle. Don't lose money in the middle. Okay. So Baby Whale has an aggressive opinion about politics. You would think that the government would work to protect the people. Okay. Daniel likes Arbitrum. Okay. Theta. Decentralized video, 4-hour chart, 13 bottom, and they're selling it anyway. 13 top goes through the blow off top level. I thought this was okay pre-PCE. And I hope it is. But if you've got the Fed on the tape for a month, I made my protest tweet, but I guess the good news about Theta is that it looks like when it goes down, right, to say $1.12, that there's someone buying it down there. So I guess it's okay that people are selling rallies, but you got to be careful when you start breaking through these structures, right? In other words, I'm okay with stuff holding, right? But if everybody who bought it up here winds up getting hosed, that creates follow-through selling. Okay, Daniel wants to look at gold. Okay, I'm not going to lie. As the Fed comes out and says what it says, the tougher the Fed talks, the more I want to turn around and buy gold on the dip. Like, one of the things about gold that people may be forgetting, is that it's a way to express the negative dollar, negative government, geopolitical concern trade without the worry of crypto regulation. Now, this could mean 4 more down weeks in gold or range trading in gold based on this DeMark work. Because you thought it was going to trend higher and then it got stymied. This is GLD. Okay. No, I did not do Cardano yet. Okay, one of the biggest reasons why, I don't know, I'm so hesitant to get super bearish is that some of these altcoins like Cardano, like at 35 cents, I mean, I know it's up a lot, but it's hard to sell into support in something like Cardano. I know if the whole market gets wasted, Cardano's not going to be spared, but I have a tough time getting negative on this when all it's really done is go to the bottom of its range. Okay. Charlie, hello from Switzerland. Why is FET so strong? Okay, that's a good question. I can definitely look more into this. All right. But this seems like a 3-wave top. What they managed to do, or what they didn't manage to do, was take out the previous 4th. So sometimes what markets do is they chase down the start of the give-up trade. The start of the give-up trade in this was at 65 cents back in January of last year. They could not quite make it. So it looks like the bulls are gunning for 65 cents. Now, they didn't get there, so that's not particularly positive, but they may try to get there if the market gives them an uptrade. Okay, when you go from 5 cents to 65 cents, my vote is to take the money in this market. Take the money so you got ammo for later. Okay, so Daniel's reminding me that this is AI. Okay, again, if you're buying AI now, you're probably buying it from somebody who invested in it 2 months or 2 years ago. Okay, STX. Okay, Andre is asking if ADA is a short. I got to be careful with investment advice. Cardano is the type of thing that you want to buy in the market's hour of despair. Okay. So STX feels like the bigger the base, the higher in the space. The only thing we're missing is the higher in the space part, right? If Bitcoin does poorly, or if crypto does poorly in March, there's going to be a retracement here before it can move higher, right? In other words, you can clearly see people headed for the door. Now, again, it's not going lower, which is interesting. So there are certain things in crypto that if you want to stay with them, like if you believe in it and you're long it from reasonable levels, or, you know, who knows, you might be trapped from up here. I mean, taking profits is one thing, but if you believe in it and you want to stick with it and you're not going to get upset if this thing goes back to 50 cents or 40 cents, then stay with it. These are the criteria for looking at altcoins these days. Okay, let's check further comments. Okay, Baby Whale likes the Wall Street stories. Mina Protocol. I saw BitBoy rotated out of Optimism. So he got in early and then he rotated out to buy Filecoin. Okay, you have a 9 top in Mina after you had a 13 top. So it looks like there was a blow off top in Mina. Not saying I hate it. The good news is support, the ceiling is now the floor in Mina. And you could have 1 or 2 more up weeks. So I would imagine believers here, if I was a believer, I would be like, okay, bears, if you want this to go lower, you've been selling this thing as it's gone up for 4 weeks. I would make them take it and close, do a weekly close below this level at 91.60. Okay, at 91.60. Okay, Skylargy 11 is here. Welcome. Somebody says oil is confusing me. Perhaps a long trade due to geopolitical issues and China demand increasing, but perhaps a short if we are going to go into recession. This goes back to something I said last market update. The most unnerving thing about this market, and then in 5 minutes, we're switching over to debate crypto. Okay, so it's kind of like market update overtime, except I'm a guest on my friends from Debate Crypto who are pretty savvy about, what they think about politics and economics. The thing that bothers me about this oil trade is, other than the fact that oil is failing badly at resistance, it makes me nervous when I see everything down at once. Like stocks down, bonds down, crypto down, everything is down, even the dollar. Even the dollar is down, right? So I know stocks are up. I get it. Okay. It always makes me a little nervous to see everything down. So here's the point. Be cognizant of the risks. I've undertalked this issue on the way up. It's not FUD to be a balanced thinker. So be a balanced thinker and have your portfolio balanced. So if something happens, you go, oh, good, it's down. Not, oh my God, what am I going to do? The time to get ready for that is now. Okay, that's the market update. I will see you tomorrow, or we're going to switch over to debate crypto.